So good afternoon, everybody, and a very warm welcome to all who have joined on the call. So, of course, I'm taking this call from at a customer event outside Pune. So, but I'm joined from Pune by Rajendra Arunachalam, our CFO, and SGA, our investor relations advisors. So I'm sure all of you must have had a look at the results that we posted for Q3 on the stock exchange. We have also circulated a presentation which I'll take you through shortly. But before I walk you through the presentation, let me just touch upon the industry scenario and the emerging market dynamics so that there is a better evaluation of the performance of the company. So in this quarter, as you all know, Q3, several results are out for OEMs as well as auto component industries. This quarter, the Q3 was actually not a very great quarter. Was much lower than the expectations due to various issues. The festive season was expected to be much better, and as you all must have read in the papers, it turned out to be much lesser than what it was. It typically is in every festive season. While we had a great run-up to the festive season, especially in the month of October, but I think the inventory in the system definitely took its toll, and we could see the figures, really depressed in the month of November and December. So yes, it was definitely a tough quarter for all of us. Added to that, of course, we had some market conditions tight liquidity, increase in insurance costs, of course, fuel price being a little volatile, overall economic activity being a bit muted, and to add to all this, of course, we have the uncertainty over whatever generally goes with the elections in India. So we had in the two-wheeler, if you talk about the two-wheeler front, we had a growth around 10%. The three-wheeler also grew at 8%. Passenger vehicle, again, you must have read, especially the market leader was also stressed on growth. I'm talking about Maruti particularly. So obviously then it affects on the overall segment. PV was at about 2%. And, SIAM has revised its estimates from the earlier about 8% to 5.5% for the year. Commercial vehicles did continue the strong momentum that it has been having actually for the past 2 years, I must say. The growth was about 24%, but even in this segment, we did see some correction in the month of December. That's what has been the story for the quarter. We also had the budget, which all of you must have closely watched. Certainly, the budget did focus mainly around the rural economy and infrastructure, which I'm sure will give a good boost to particularly the rural demand, which affects the two-wheeler segment particularly. So we are hoping this will be positive. And going forward, of course, the passenger car I already shared with the market may not look much better to the end of the year, because we are currently seeing, we are witnessing some slowdown in volumes as well. Now I'll get with this brief introduction about what has happened. I'll get into the presentation. So if you refer to the presentation and move to slide number 3, which basically shows in a graphical format the key figures. The revenue for the quarter was 510 crores. So this was a good growth of 14% over a comparable quarter. Yes, to be honest, our expectations were definitely higher than this, and I did share with you why it did not happen. We have, as you know, in the previous quarters, we have been doing almost 20% growth compared to last year, but this quarter has been a little low. EBITDA grew by 6%. PAT up by 2%. PBT, of course, up by 9%. So this is on the slide number 3. If you go to slide number 4, which again gives for the 9-month performance, we have a 17.2% growth in revenue. So we are for the 9 months we are at 1556 crores. As you all know, this is, of course, the highest revenues ever for this 9-month period in Gabriel history. EBITDA grew at almost 15%. So EBITDA is at 9.2%. PAT is up by 5. PAT is up by 13.3%, which is at 5%. Slide number 5 shares the segment mix and the channel mix. So we saw a slight correction in the mix. Two-wheeler was strong, of course. We had some correction which we saw in the month of Q3, particularly in the passenger car segment. And in addition, of course, we had one of our models which we are on, which is the WagonR. I mean, the volumes of that dropping. So this has impacted us. However, I'm also glad to share that while we are looking at some drop in passenger car volumes in the short term, we have won several new orders, and in fact, our business pipeline has really picked up very well in passenger cars. But those orders will start kicking from the next fiscal. Commercial vehicle is about 14% steady, and we continue to be the market leader there. In terms of channel performance, we had a slightly improved performance in the aftermarket. So that is at 12%, and also in the exports, which is at 5%. OE is at 83%. On the next slide, we have the detailed financials and a detailed P&L statement. As you can see, we have had a higher raw material cost at 72.7% for Q3. Mainly, there has been a continuous increase in commodities over the last, almost over 1.5 years. And while we have a back-to-back arrangement, in a scenario where there's a continued increase, we do suffer from a lag effect. And also, we are in the process of settling the commercials with some of the OEMs, so that is not yet concluded. So with this, we are seeing an impact of raw material costs, so which is slightly higher. And we definitely have done some corrections on the cost control side, which will continue for the rest of the year. But you can understand when we are at a very high volumes right up to the period of October, immediate correction is never possible at that speed. So that has overall impacted us on, as I already shared, on the EBITDA front. And if you move to slide number 7, this is the quarterly performance trend, again, the graphical format, which is with a view of the last couple of years. Our EBITDA has been continuously around 9% plus. This quarter has been an exception at 8.4%. Coming to slide 8, which is mainly the awards that we won. We won the first ever award in the railway segment, which is Innovation in Rolling Stock Components, given by Rail Analysis India. In fact, we are the only Indian company being given this award. It was a very proud moment for all of us, for all the development work that we have done on our own in the railway space. And we continue to win ACMA awards, which is Automotive Component Manufacturers Association, in the field of quality and productivity and safety. So that continues. Our teams continue to keep improving their performance every month. And we continue to be India's best places in manufacturing. While we are already in the top 100 best places to work, they also come out with the best places in manufacturing in India. So we are glad to share that we are in that list as well. So this is in brief what the quarter was. So now I'll keep it open for any questions and any suggestions, any feedback that all of you always share. So open to you. Thank you.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, my first question is on the growth in different segments. So, I mean, just going by the, the percentage, that mix you share, it seems that the two-wheeler industry would have grown in excess of 20% this quarter on year-on-year basis. So that would be right?
You're talking about the industry or Gabriel?
For Gabriel, the revenues in the two-wheeler segment would have grown by in excess of 20% kind of thing.
Yes, we have been ahead of the market growth, definitely. Yes, we would be around a little less than 20%.
Okay, and the PV would have grown again, degrown again like 5 to 10% this quarter for us?
Yes. There was growth in PV.
Yeah, in PV, so you pointed out that, the markets were also down and maybe we might have lost onto the WagonR volumes also.
Yeah.
But we do have the new WagonR with us, right?
No. That's why I mentioned otherwise it would have compensated. No, we have not got the new WagonR.
Okay.
But we have won the new Alto, which is going to be launched in start of production at sometime in the month of August. So that's on the Maruti and Maruti front. In addition, since you asked on the passenger car pipeline,
right.
Like I shared, we have won, the new Volkswagen, which is called the India 2.0, which will be mainly led by Skoda. Mm-hmm. So we have won that platform, the entire Volkswagen Skoda platform, which is going to come again in the year of 2021. And we have also won the Mahindra replacements, the new platform again for the XUV 500 as well as for the Thar. And already shared, we have won at the Peugeot Citroën business as well.
Sorry, the last one I didn't get, sir.
The Peugeot Citroën, PSA.
Okay. And sir,
there is a good build-up of pipeline, but of course, in the short term, we'll see a bit of a dip.
Okay, so I mean, any other models we would have lost in recent times where we could not get the new platforms where we were present in the earlier ones? Except for WagonR, you pointed out.
No, this is the only exception.
Okay. And, sir, on the CAPEX front, I believe, this was the year, where the CAPEX is high for us. Can you just help us out how much we would have invested so far? And the plans remain the same? And when the new capacities, come into play, on the CAPEX front?
Yeah, so CAPEX, of course, we have deferred one part of the CAPEX, which was, we basically had two major CAPEXs this year. One was in Sanand for the two-wheeler plant, for the Honda motorcycle front fork business, which is absolutely on stream, and the building is ready. The machines have started coming in, so it's absolutely on track. The second major CAPEX was, a backward integration, basically, augmentation of capacity for piston rods, which goes into passenger cars mainly.
Right.
So with this outlook in passenger car, we have, of course, taken a decision to defer the CAPEX.
So how
it is only prudent to defer the CAPEX.
So how does the CAPEX numbers look like on a revised basis now? How much will be investing this year and how much would move into next year?
Yeah, so Raj, you want to take that?
Okay. So this year we should be spending close to about 85 crores on capital expenditure. Here we expect the number to be around about 70 crores. I think a more firm number we should be able to share in the next call. But that's the current estimate at this point of time.
So sorry, 85 crores for this year, right? And 70 crores you're saying next year, is it?
Right.
Okay, yeah. But sir, that's like, I think we have earlier guided of 160 crores in CAPEX. So in terms of deferment, when we talk about the 70 crores for next year, are we factoring in anything from that front fork CAPEX? The piston rod CAPEX, or we are not factoring anything in there now?
Yeah, so, Manoj, you want to take that, or?
No, on the piston rod CAPEX, no, because what we have done, we have made some alternate arrangements as well. We have increased our outsourcing.
Okay.
Because that, obviously it makes better commercial sense at this moment of time. So we have done that at the moment.
Okay. And so could you also just lastly help me out with your cash levels in the books?
So our cash levels continue to be, good since there has been a higher capex than what, we've traditionally spent, about 40 to 50 crores.
Right.
Accrual to the bottom line is not exactly as the prior years, but it is all right since I think we're not disclosing the balance sheet as at the end of December. I don't have a specific number to share, but the number is similar to the September end results which we had disclosed.
Right. Okay. Thank you so much. I'll join the queue for more questions.
Thank you.
Thank you. The next question is from Prayesh Jain from Yes Securities. Please go ahead.
Yeah, good afternoon, sir. So my first question is on the gross margins. We've seen the pressure, and you cited that raw materials was a reason for it. Two questions there. Is there an element of mix out there when you say that two-wheelers are moving up? In that sense, is there a mix impact there? And secondly, do we see the benefits or the negotiations once they are through? Do we see the gross margins improving back to the prior period levels?
Yeah. So to answer your question, yes, the negotiations once concluded will definitely help us improve our EBITDA. And also, your first question about product mix is because the passenger car the volumes have dropped, so naturally that has impacted the overall margin as well. So both the reasons are absolutely true, but you will see, once we conclude, and as I said, once the raw material cycle goes into the other cycle of easing down, we'll definitely see a positive impact.
So you see Q4 margins to be significantly better than Q3?
Well, unfortunately, we don't share guidance the next quarter.
Mm-hmm. Okay.
I'm not able to answer that.
And could you throw some light as to, with the kind of volumes we've been seeing in January for the OEMs, it has been quite weak. And so do you see that also impacting your business? And what is the outlook, or what kind of order inflow you're getting from the OEMs, or order kind of information from the OEMs with regards to FY20?
Yeah, so, January did start off sluggishly, but later on it did seem to catch up. However, as I mentioned, currently the entire industry is grappling with a situation of complete uncertainty. So there is, people are not, definitely not as bullish as, the first 2 quarters. So we are seeing that, the correction in terms of the downward correction in volumes happening from some of the OEMs. So we already started it, seeing that already. So we have taken again a call, like I mentioned, we took a call of deferring capex. We also, taken decisions of cutting down costs and brace ourselves for definitely a difficult quarter and difficult year also being ahead.
Mm-hmm.
I think the clear picture will emerge only after the elections settle down. I think the first quarter is this is the entire industry approach currently.
Mm-hmm. Could you give some outlook on the railways business?
Railways continues to, of course, it's a tendering business. So, we have won some, won the new LHP orders. So that continues the way it was. No major change, because the volumes are not really high.
So do you see this railways contributing meaningfully in any time in the medium term, like say 3 to 5 years kind of level?
Pardon? What is the question?
Do you see the railways business contributing meaningfully over the next 3 to 5 years?
No, unfortunately, the railway growth plan, as far as revenues are concerned, they are pretty much stable. The change that happened on the LHP that has happened last year, unless really they start, improving their coach building speed, then certainly it will see the effect. So yes, 3 to 5 years, I would still say yes.
Okay. All right. Thank you so much.
Yeah, thank you.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from Dhiral Shah from ACM Investment. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So my first question is, so what is our share of business from TVS Motor?
In TVS Motors, Shah, we are one of the largest vendors, and we have very dominant share. Of course, we don't share the figures, but we are absolutely the dominant player in TVS Motors. So,
because are we losing any market share? Because recently, one of your competitors have bagged an order from the TVS Motor.
No, we are not losing any market share, definitely. In fact, we had an improvement. That's why our two-wheeler growth is, there was a question earlier as well. So our two-wheeler growth has been better than the industry. It's mainly on account of, some improved market share from TVS.
So our market share is still intact, right?
Yes.
Even after our competitor bagging a new order, from the TVS side.
In fact, it's improving. I can certainly say that.
Okay.
Also, it's not sure as to whether you're referring to any suspension business order acquisition.
Yes. Hello?
No, not that. As far as I can share with you the current figures, certainly market share is improving.
Okay. And so secondly, sir, my question is regarding again EBITDA margin, because we were focusing on a double-digit kind of a margin lever, but this quarter we have seen the dip in the margin. So again, we are on a track to achieve 10% kind of a margin in coming quarters.
See, that, Mr. Shah, continues to be our endeavor. So like I said, the expectations of growth did not happen. So, it is a challenging, it was a challenging quarter. Going forward also it's going to be challenging, but we have taken actions to ensure at least that, we control the cost. So, as I said, the cost control, it's not like it can happen, immediately when we want to do it. It takes some time for all the actions to start yielding results. So, but clearly, the action is to come back to the EBITDA margins that we have continued to deliver.
Okay.
So you will certainly see that.
Okay. And so thirdly, sir, what is the replacement cycle of our product? A buyer who buys a new bike, let's say, yes, sir.
Yes, it varies. It's fastest in three-wheelers. Three-wheelers, it's, less than a year. In two-wheelers, it can be 4 years. In passenger car, it can be about 5 years.
Okay, and for three-wheelers, it would be?
It's a year. 1 year.
1 year.
Yeah. And we are a dominant player in the three-wheeler market.
Okay. And sir, lastly, sir, this 70 crore capex for FY20, so what could be the breakup of that?
Raj, you want to take that?
This would broadly be in the, there's no specific major item unlike what we had in the last year to specify. These would be additions in our R&D, in our capacity debottlenecking, in our quality improvement, as well as some maintenance capex. There's none which is as, of a specific project in nature.
Okay. And so lastly, sir, what is the outlook for FY20?
Your question on capex was for the next year, right?
Yes.
Okay. So, like Raj said, so in addition, we are, of course, focusing on some automation. So that's two key areas. I mean, the three key areas are basically R&D, automation, and quality. So I would say these three would be the main themes going forward with all capex.
Okay. And so what is the outlook for FY20?
FY20, we are still looking at growth. As I mentioned, I think the first quarter will take time for the new government to settle down. So that is uncertain. But however, we hope the second, third quarters to be fairly good. The last quarter again of next year is going to be because of the GST changeover. Again, as you can see, there are several views floating around as to when will it hit the industry. So it might, in all likelihood, happen in the last quarter of next year. So next year is a mixed bag. There will be growth, certainly, but I would say, a bit of muted growth.
Okay. And so this new capex for Honda, when it will be come on stream?
As I said, we already, the building is ready. In fact, we will be doing the first trial productions in the next month.
So it will be commercialized by when, sir?
No, the project will, in terms of the sale, will happen only in the end of 2019.
End of 2019?
Yeah.
Okay. Okay, so that's it from my side. Thank you.
Right. Thank you.
Thank you. To ask questions, you may press star and 1 on your touchtone telephone. The next question is from Harshal Patil from BNP Sharekhan. Please go ahead.
Thank you, sir, for the opportunity. So just had one bookkeeping question. So the tax rate for the quarter seems to be going up. I'm sorry if you've kind of commented earlier, but maybe, if you could just elaborate on that front.
Yeah, okay, I'll comment on that. So the tax rate is based on the full year estimates of, tax benefits that we might be able to accrue, and so there is some change in some assumptions. The deduction which we enjoy is on 35(2)(ab) on both the revenue and the capital expenditure for R&D.
Okay.
So there is some change in the assumptions there, and that's, I think, the reason why for the quarter possibly there is this thing. But as a full year basis, I think our tax rates would by and large be as what we had earlier estimated.
Okay. So the outlook on that won't change going ahead.
I think this would be
about 30
the last year where we would have the 35(2)(ab) as per the current government guidelines in this regard.
Okay.
And I think that's the benefit only which we'll enjoy.
Okay, sir. That's it from my side. Thank you.
Thank you. Before we take the next question, a reminder once again to our participants, please press star and 1 to join the question queue. The next question is from Arun Agarwal from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity again. Sir, on the tax rate thing again, I think you would have earlier guided around 31 to 32%, right? That's what the guidance has been for us.
Yeah, you are right.
Okay. So on the gross margin front, again, while you said that you don't, share the where how the margins will pan out going forward, but just given the current situation where we have already seen continuous increase in commodity prices, and we have seen a bit of softening in the recent past, and we would have taken negotiations with at least some of the customers, if not with all, directionally. But do you think the margins should improve going ahead from these levels? Not specifically on numbers, but directionally.
Yes, it should definitely improve from where we are.
And so these negotiations, we generally have do with a lag of 3 to 6 months, right?
Yeah, that's right.
Okay. And see, the other question is on your growth that we would have seen this quarter in the replacement and the export market that you highlighted earlier. Could you throw some more light on that? How the growth has been in both the replacement market and the exports?
Yeah, so the replacement market, of course, we have, we had initially a bit of sluggish in the first 2 quarters. So the actions that we had taken place in terms of, connecting with the retailers and, of course, the launch of new products as well. All that is coming through. So certainly that has helped us improve our market share. We launched several new products, both in the shock absorbers as well as we launched a new product called the steering cone set. So we are trying to basically leverage our brand and everything around the suspension part. So we are in the suspension, tires, wheel rims, there's a steering cone set as well. So we have launched almost all the products in that space. So that is helping us gain some additional volumes in aftermarket.
Okay. And so on the exports, did we have any specific additional order this time? Because the share in the revenue pie seems to have increased. So
not really. I think it was just some backlog of volumes also which we could execute in this quarter. Raj, on the exports, anything specific in this quarter that we had?
No, nothing that is of
specific. Yeah, that's right.
Okay, and the replacement growth or the revenues that we would have seen this quarter, is it sustainable? I mean, or
yes,
how do you see how's the
certainly.
market? I mean, there in the replacement side right now.
Yeah, I think that's certainly sustainable.
All right. Okay, thank you, sir.
Thank you.
Thank you. A reminder once again to our participants, please press star and 1 to join the question queue. The next question is from Ayushi Rathi from Narnolia Securities. Please go ahead.
Hello. Hello.
Yeah. Hello.
So my question is on employee and other expenses, and this quarter it has been increased. May I know why this would have been increased? Is there any specific reason?
Can you repeat that? Sorry, I didn't quite catch you on that.
Hello. Sir, employee benefit expenses and other expenses during the quarter, it has been increased. May I know if any specific reason why this would have been increased? And can you see what we could say it looking forward?
So, I'm not sure. As a percentage to sales, you would see that compared to last year, 7.9%, it's at 7.4 for the quarter. And on a full year basis, it's at 7.4 compared to last year, 7.6. Having said this, on a percentage to sales, the YOY increase or quarter-on-quarter increase is fairly in line with either the volume increase or the annual increments that we need to give. And I don't see any exceptionally large increases unless if you want to highlight anything specific.
Okay, sir. Thank you.
Okay, thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from Saji John from Geojit Financial. Please go ahead.
Hello.
Yeah, hello.
Hello. Yeah, sir, thank you for giving the opportunity. So anything on the technology front that we are going to do on the new mandatory rules which is coming from the automobile sector? So anything which we have any role on that?
Yeah, so the regulations that are going to change in terms of safety or in terms of even emissions in BS6, as I had shared, in a way, fortunately, Gabriel is insulated from that because the product remains the same. It does not impact our product. However, yes, due to the fitment of ABS, there may be some change in bracketry, etc., which is a normal method that happens in any change, which is implemented as a regular engineering change in our industry. So there is no particular impact that it is going to have. Having said that, I would like to share on the technology front. We are continuing to invest on the technology. In fact, we are now working on our tech center for the four-wheeler and commercial vehicles. We already have a tech center building in Hosur for the 2 and 3-wheelers. So we have started construction of a new building for this tech center so that it provides greater focus on this very important aspect of our industry.
So on that basis, are you looking for any kind of strategic alliances?
No, as you know, we have alliances on project base with several global OEMs, global shock absorber manufacturers. So that's based only on project. But this tech center is entirely going to be done by us, which is based on mainly inputs from the customer that we keep receiving, as well as the benchmarking exercise that we do for ourselves in the industry.
Thank you, sir. Thank you for my side.
Thank you, Sajid. Thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone telephone. The next question is from Hiral Kinya from Insect Securities. Please go ahead.
Yeah. Hello. Thank you for taking my question, sir.
Yeah.
So just wanted to ask you one thing. What is the outlook for RMAT going ahead?
Outlook for?
Raw material prices going ahead. because we have been witnessing continuous rising pressure for the raw material prices. So, what is the outlook going ahead? Like, would we expect the same, 72-73% for FY20 also?
No, our target is to definitely, bring it down. There's no doubt about that. As I said, we of course cannot predict which way the raw material cycle will move, but we are seeing a slight softening. If I can, take any meaning out of that, and if that softening happens in next year, certainly you'll see this trend change, in our favor. However, it's very difficult to take a call on which way the raw material will go. But yes, we have already kicked off, several exercises in controlling our raw material costs and reducing our raw material costs, which will start kicking in, from April of this year.
Okay. And sir, one more question on the front. Like you have just mentioned that we'll be incurring a capex of We'll be incurring a capex of 75 crores. So this year, we are targeting a capex of 75 crores this year. So could we have a split of what would be the maintenance capex of that also?
Did you mention this figure for the current financial year or the next financial year?
Sorry, sir. I'm sorry. For the current financial year, it was 85 crores. Sorry, you mentioned 85 crores. So can we have a split of that?
For the current financial year, the major capex would be for the Sanand. We are putting up a factory for the HMSI front fork business. And I think we had indicated that in our earlier disclosures. So that would be the major part of this 85 crores in the region of about 40 crores plus. The balance would be in our regular capex for R&D or capacity debottlenecking, maintenance, some automation projects, and those would be the broad breakup of that 85 crores.
Okay. That's it, sir. Thank you.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. As there are no further questions, I'd like to hand the conference back to Mr. Manoj Kolhatkar for closing comments.
Okay, thank you. Once again, thank you all for all your questions. As I mentioned, this quarter definitely, could have been better from industry point of view and from company point of view as well. Our efforts are on to ensure, to tighten our belts for, it's really clear that it's going to be a little uncertain and a tough 2 quarters at least. So we have already taken all the actions necessary to at least, assure our profitability. The growth part is certainly, being honest, is going to be muted, but let's hope something better turns out once we enter the new year. So that's all that I have in terms of our current and as well as the outlook for the future. Our efforts to improve our market share in each segment continues, aftermarket as well, including of course 2-wheelers, 3-wheelers, commercial vehicle and passenger cars. So I did mention some of the businesses that we have already acquired in passenger car space. 2-wheeler, 3-wheeler continue to remain. 2-wheeler, 3-wheeler and commercial vehicle continue to remain strong. So we'll definitely, hopefully look at definitely a better year going forward. So thank you all. This is what I have to share. So look forward to the next meeting that we have. Thank you.
Thank you very much.